Okay, hey, this is try number two for the LinkedIn and YouTube version of the video. My last video was 30 minutes, so I'm going to give, this is going to be the condensed version. So I want to talk today about the main principles of our club to give you kind of more of a meat and potatoes of what our club is about. And I'll just list those off really quickly. What I want to talk about today is that we're not an online club, we're a face-to-face club. This is not financial advice or some kind of system. It's about education and ideas. This is not a get-rich-quick scheme. This is not about capital gains, and it's not about a job. So those are the 5 topics I want to cover. First, I do want to kind of hit back to the last video and just say we talked about like the Mother Teresa example. I just want to make it clear again that this club isn't for everybody, and wealth is not necessarily something you have to do. There can be you can lead a very joyful, prosperous, abundant life and never really have any wealth to speak of. Somebody who, maybe they set a little aside for a rainy day or set a little aside for their twilight years, but basically they work and provide value to people through their job, and they make a living and live their whole lives like that. There's nothing wrong with that. That can be a very beautiful thing too. So I just want to kind of hit that again, that building wealth is not for everybody. But if it is for you, and you're thinking about getting around some people that build wealth as well and that have that same mentality, consider our club. But only if you really kind of buy into the gestalt or the mission. And our mission statement for our club is that we encourage and educate each other to build passive investment income. It seems kind of innocuous and vague, but really that is a very specific mission. So the encourage part is this is about a face-to-face community. It's not online. It's not some social group or some social network or some kind of like get around a guru and kind of listen to some pre-packaged videos or anything. Although I am using online to promote it. This is about a face-to-face connection. It's where you can come and network with other people. And a lot of people meet outside of our club, but they met at our club where they say, hey, let's get together for coffee once a month, kind of alternating weeks of the club. And just talk about our goals and kind of encourage each other. So that encouragement is about of our mission statement is, hey, this is face-to-face. This is about personal relationships and getting around people that have the same mindset and they're trying to do the same thing. Number 2, it's not financial advice. I'm not a financial advisor or tax planner. We do have some of those in our group, but still there's no financial products that are being marketed by the group. We do have guest speakers that come in and talk about financial products they're selling. We also have members that talk about partnership opportunities. But anytime one of those comes up, I say it over and over again, hey, the club does not endorse this in any way. This may be a great investment opportunity. It may be horrible. You've got to do your own due diligence. You've got to run this by your financial experts. And you're the quarterback of your team. You've got to decide if this is right for you or not. And the club does not endorse any of this in any way. So it's not financial advice. It's about sharing ideas, though. So the education part of our mission statement is, let's come together. Let's share ideas. Let's talk about, what have you done? What have you done? How have you succeeded? Where have you failed? What problems have you encountered? How do you struggle? What are some things I should be thinking about if I try that? These are the kinds of things that we talk about. Number 3, it's not a get-rich-quick scheme. Although I said there isn't a system, I'm going to tell you what the system is. This is the system of building wealth, and that is live below your means. Okay, that's number 1. Work harder to raise your income, or be more diligent and sacrificial and lower your expenses so that you have some margin in your budget. Take that margin and invest in investments that produce income. So if you live below your means and you take that extra money and you invest it in income-producing investments, the math just works out. The numbers just start to snowball, and you build wealth. Like it can take a long time or a short time, but usually it takes a lot of time. And it seems simple, but just even that first step, living below your means. Not many people can do it. Most people live paycheck to paycheck. Some people kind of force themselves or trick themselves into building some assets, like, hey, I'm going to buy a house and I have to pay the mortgage, so I'm kind of forcing myself to build equity. Or I'm going to work for somebody who takes money out of my paycheck and I don't really have a choice, and they just take it and put it into my retirement account. But most people, if they're given that money in a paycheck to set money aside for for investing or for building wealth, like a lot of people just don't have the wherewithal to do it. It's very tough. It's not easy to do. It's very challenging. And so getting rich is not, it takes grit, it takes sacrifice, it takes effort, and it takes time. So this is not a get rich quick scheme. And then the last two, I'm going to spend quite a bit of time unpacking these last two. It's not about capital gains and it's not about a job. So if I talk about investing, a lot of people say, well, I buy mutual funds. And again, there's not necessarily anything inherently wrong with them. But mutual funds, most mutual funds, not all, but most, don't pay a dividend. They either invest in companies that don't pay a dividend. There is profits there. The companies make profits. So either the companies reinvest those profits themselves into their own company, or the dividends they do kick back to the mutual fund buys more of that company. So there's no investment income. It's all capital gains, meaning I'm going to buy a mutual fund at this price, and I'm going to hope to sell it at a higher price. And that's capital gains. That's not income. So we generally, we don't really talk about capital gains. You can trade short-term in the stock market, day trade or whatever, and you can make money, but that's short-term capital gains. I'm trying to buy low and sell high. You can also lose money in the stock market too. FYI, if you didn't know that. So we generally, so it's not about capital gains. So mutual funds are just one example of things we don't really talk about a lot because it's capital gains, it's not income. The next is it's not about a job. So you might think about business ownership. And business ownership can be a great way to build wealth. There's a great book, The Millionaire Next Door, and it talks about, the next door meaning you probably wouldn't realize who millionaires are. They kind of, they drive their kids to soccer and this and that, and they're kind of just doing their thing. But most of them became millionaires by living below their means, number one. That's one of them. But he identifies several attributes that seem to me be more common amongst millionaires. And he talks about how most of them built their wealth through building a business. And so that's true. So there's wealth to be had by building a business or owning a business. But a lot of business owners work 40, 50, 60, 70 hours a week. And so now that's suddenly a job. It might be a very high paying job, but that's a job. And so really we're not, we would call that active income. Getting a paycheck for a job is active income. If you own the business and some of your paycheck is for, this is passive income over here. Some of your paycheck is profits on the business and some of it is paycheck for managing the job. Well, it's still kind of towards that end. And some of the stuff I'll talk about that is passive isn't really passive. It might be, it's a spectrum is what I'm driving at, but we try to be more on the passive side of things. So those are really the two things. So I'm going to talk about three main categories of investments: business ownership, lending, and real estate. And then I'm going to talk about within each of those categories, publicly traded side and privately traded side. So let's talk about business ownership. I mentioned business ownership, but you could own a business, and if you're working 70 hours a week, you can move that towards the passive side. If you have enough profits to be able to hire a manager or two, if you're working 70 hours a week, let's face it, you're going to have to hire two people. So you hire a couple managers to do the job you're doing and still have enough company profits left over to provide you some passive income, where you're a semi-absentee owner. Yeah, you might still have to meet with those managers maybe once a week for a couple hours. When the managers quit, you have to spend some time rehiring or something. But it becomes much more of a passive investment. So small business is a great way to build passive income streams. But it's also very risky and it's very tricky. So we don't talk about it a lot just because it takes a special person. Not many people can do it. Like even I said, not many people can live below their means. Not many people can build wealth. Now, people that can build business, man, it is tough. It's challenging. So we do talk about it, but not a lot. And we almost rarely, very, very rarely do we talk about stocks. I talk about why we don't talk about mutual funds, but stocks, even ones that pay dividends, even the ones that pay all their profits in dividends. Right now, as a market, you're going to get about 4 or 5 cents for every dollar of stock you purchase if they turn all their profits to dividends. And if you're getting more than that, it's because that company is risky. But the market average right now is about 4 or 5 cents. And you go, well, that's not terrible. You can build wealth with that as a tool. But we're generally looking for a higher return. But a higher return it takes a lot of effort and a lot of time to figure out how to do it right and to get it started. Like building a business on your own, that takes a lot of effort. So business, we talked about a little bit. We definitely don't talk a ton about stocks, and we do talk a little bit about business ownership, private trading. So lending, the public version of that is a bond. Well, if you're getting maybe 3 or 4% interest. If you're getting more than that, it's because it's a risky loan. So there's, it's 3 or 4%, 3%. You're kind of keeping up with inflation. That's it. So you can loan money. If you're loaning money to a bank by putting it in a savings account, you're getting less than inflation. You're losing to inflation. But so is there a private version of that? Is there private lending? Yeah, and it can be pretty high return. So you can lend privately. Someone needs a loan for a car, or a loan for a house, or a loan for just the typical thing. A loan for a business. You can lend on a business, and you can get higher returns than a bond. It is riskier. It is more challenging. It's very easy to be illegal when you originate private loans. There's a lot of rules that protect the borrower. And just if you're kind of a beginner, it's very easy to do it illegally, to do it incorrectly. It might be totally fair to the buyer, to the borrower. It might be totally helpful to them, but you might be doing something that's illegal and not even realize it. And it takes a lot of capital. And so it either you do a lot of little loans and it becomes a job, or you have to, if you want to do like a mortgage, it's like a $200,000 loan, and you go, wow, that takes a lot. That's a big chunk of capital. So we tend to focus on the third category, real estate, because it's a little more tangible and concrete. Like the risk of it disappearing is maybe smaller, maybe not. But businesses, if the profits go away, boom, it's worthless, right? A business that loses money is worthless. It's not worth anything. So real estate, though, if it goes vacant and you're losing money, you still have the land, you still have the building. There is still something tangible, real there. It's a real asset. And so on some level, it might be lower risk. And also, there are pathways to get in with much less money down, and maybe, although you can bootstrap a business, but as far as buying a business or buying or lending money, you can get into real estate with less money down. Now it's riskier, it's more challenging. You have to do it with debt, and that's risky. But there are ways to get into real estate with no or low money down. And so we do tend to focus on real estate just because it's an easier entry point as far as all the private investments, between private business, private lending, and private real estate. Real estate's a little easier to get into. Although maybe it's not as high return as some of the others, although maybe similar return to lending. So the real theme is, our only guiding principle is passive investment income. So not capital gains and not a job, although, it does take work. We are willing to get a little more on that. I got to do the due diligence. I got to negotiate it. I got to set up the contracts. Now I'm going to hire professionals to help me with a lot of that, but I can do all that. So really, you can build wealth with stocks. So I'm just going to close up with a closing remark here. Maybe you're passionate about the work you're doing, where, hey, I really am providing a benefit to people. I'm good at my job. I make a good living. And I don't want to get distracted by, some of these crazy ideas Pat's talking about. I just want to throw money to my broker and build wealth that way. And that's perfectly fine. Like, that is great. And that's a very, you can do that and throw your heart and soul into your job. Just make sure you're passing enough portion of your income to your broker so that you can build wealth, but it can be done that way. And that might be the way that you benefit the most people. Remember, that's the goal, benefit the most people. And so don't let this get you distracted. A lot of people start hearing these ideas and go, yeah, I hate my job. I'd love to be wealthy, da, da, da. And so they kind of get distracted, and it takes away from them helping other people. So, but if you are a person who has created margin in your budget, where you're living below your means, you've created some margin in your time, so you can spend a few hours a week studying and learning to get closer to these investments, to get closer to the more privately traded investments. And you like some of the themes I've talked about, then check out our club. Come join us this Monday night, November 12th at 6 p.m. You can find out more at Bozeman Investor Club, BozemanInvestorClub.com, or find us at Meetup. by searching for the Bozeman Investor Club. So thanks for listening, and go out and make some passive investment income.